Tariffs are
Federal Reserve Chair Jerome Powell said Friday the tariffs imposed by U.S. President Donald Trump could lead to higher inflation and slower growth. That would create a potentially difficult set of decisions ahead for the central bank.
We face a highly uncertain outlook with elevated risks of both higher unemployment and higher inflation.
This result would undermine both of the Fed's mandates of 2% inflation and maximum employment, Powell said at a business journalists conference in Arlington, Virginia. Powell spoke as global markets continue to swoon that has wiped some 10% off major U.S. stock indexes since Trump announced a raft of new tariffs on Wednesday. Trump, in a social media post, called on the Fed chief to cut interest rates, saying it was the perfect time to do so. Powell said they need more data before making any decisions.
We're well positioned to wait for greater clarity before considering any adjustments to our policy stance. It is too soon to say what will be the appropriate path for monetary policy.
Investors in contracts tied to the central bank's policy rate appear to be expecting the risks to slower growth will dominate. Markets now expect 4 percentage point rate cuts from the Fed this year, versus 3 before Trump's announcement of tariffs that could tax imports an average of as much as 27% by some estimates, versus about 2.5% at the end of the Biden administration.